How AI is quietly replacing financial experts. Imagine a world where financial advisors, analysts, and portfolio managers are slowly being replaced, not by people, but by AI. This isn't science fiction. It's happening quietly right now. Artificial intelligence is reshaping the financial industry, automating analysis, predicting markets, and optimizing investments with a speed and accuracy humans cannot match. For decades, financial experts were trusted to guide our wealth, but AI is quietly taking over tasks they once dominated, and the consequences are huge, both for investors and for the experts themselves. Those who embrace AI gain an unprecedented advantage, while those who ignored risk being left behind. Financial experts have always been highly valued for their knowledge, insight, and decision-making skills. But AI is changing the game. Algorithms now analyze massive datasets in seconds, simulate countless scenarios, and even detect patterns invisible to humans. AI can monitor global markets, evaluate risk, and recommend investments faster than any team of analysts ever could. In this video, we'll explore 10 ways AI is quietly replacing financial experts and what this means for your money and career. Before we dive in, like this video, subscribe to the channel and turn on notifications. Understanding this shift early is critical if you want to stay ahead of the financial curve. 1. AI automates investment analysis. Financial analysts used to spend hours reviewing company reports, market trends, and financial statements. AI now automates this process, scanning millions of data points in seconds. From detecting emerging market trends to evaluating company health, AI provides insights that were once the exclusive domain of experts. Investors who adopt AI-powered tools can make smarter decisions faster, reducing reliance on traditional financial advisors. 2. AI predicts market trends accurately. Predicting markets has always involved guesswork, intuition, and human error. AI uses machine learning to analyze historical data, global events, and real-time market movements to forecast trends with remarkable accuracy. For example, AI can detect subtle patterns in stock prices or crypto markets that human experts would likely miss. This predictive power is quietly replacing many traditional roles in market research and investment advisory. 3. AI optimizes portfolios automatically. Portfolio management is a core task of financial experts. AI now automates this by constantly rebalancing investments, minimizing risk, and maximizing returns based on real-time data. Investors no longer need a human manager to manually adjust portfolios. AI algorithms do it faster, more efficiently, and without emotional bias, a capability humans often struggle with. 4. AI reduces human error. Financial experts, despite years of experience, are prone to mistakes caused by fatigue, bias, or information overload. AI eliminates these errors, providing consistent, data-driven recommendations. This reduces the chance of costly mistakes, which has historically been a major advantage for human advisors. The more businesses and investors trust AI for accuracy, the less they rely on human experts. 5. AI provides 24/7 monitoring. Human experts can't work around the clock. Markets, however, never sleep. AI systems continuously monitor global markets, economic indicators, and financial news in real time. They detect anomalies, risks, and opportunities instantly. Investors and institutions relying on AI gain a level of oversight and responsiveness that traditional experts simply cannot match. 6. AI handles complex data at scale. Modern finance generates vast amounts of data every second, too much for human experts to process fully. AI can analyze massive datasets, identify correlations, and extract actionable insights instantly. This capability replaces the traditional role of financial analysts, whose work was previously limited by human capacity. The result? Faster, more informed financial decisions. 7. AI personalizes financial advice. Traditionally, financial experts provide advice based on broad categories: income, risk tolerance, and goals. AI, however, can personalize advice for every individual, adjusting dynamically based on spending habits, market conditions, and personal goals. Investors get tailored recommendations in real time, reducing dependence on human advisors for planning and strategy. 8. AI reduces costs for investors. Hiring a financial expert comes with significant costs: advisory fees, consultation charges, and ongoing management expenses. AI reduces or even eliminates many of these costs by providing intelligent, automated guidance at a fraction of the price. More investors are now choosing AI tools over expensive human advisors, quietly disrupting the industry. 9. AI enables self-service investing. AI-driven platforms empower individuals to manage their own wealth without relying on traditional experts. Robo-advisors, automated trading platforms, and AI-based financial tools allow anyone to invest, rebalance, and optimize portfolios. As self-service solutions become more advanced, the need for human intervention decreases, slowly replacing roles that once dominated finance. 10. AI accelerates decision-making. Speed is critical in finance. Human advisors, no matter how experienced, take time to analyze, advise, and act. AI can process information, run simulations, and make decisions in seconds. For high-frequency trading, market analysis, and investment optimization, AI outperforms humans consistently. This acceleration is quietly reshaping the entire financial landscape. AI is quietly but fundamentally changing the financial industry. Tasks that once required years of experience and specialized knowledge, from analyzing complex data sets to predicting market trends, can now be performed faster, more accurately, and at scale by AI systems. This doesn't mean human experts are irrelevant, but it does mean their traditional roles are shrinking. The implications are profound. Financial experts who fail to adapt risk obsolescence, while individuals and institutions using AI gain speed, accuracy, and efficiency that was unimaginable a decade ago. The playing field is being leveled, but in an entirely new way. Knowledge and experience alone are no longer enough. Those who leverage AI intelligently can optimize investments, reduce risk, and access opportunities previously limited to elite experts. Ultimately, AI isn't just a tool. It's a transformation of the very way money is managed, invested, and grown. It rewards adaptability, strategic thinking, and early adoption, while punishing those who remain tied to outdated methods. The financial landscape will continue to evolve, and those who understand this shift now will not only survive but thrive. The future belongs to those who embrace AI, integrate it into their decision-making, and use it to amplify their financial power. The question is clear: will you rely solely on traditional advice, or will you embrace AI to make smarter, faster, and more profitable financial decisions? Like this video if it opened your eyes to how AI is transforming finance. Subscribe to stay updated on AI-driven financial strategies. Share this video with someone still relying only on traditional financial experts. Comment below. Do you think AI will fully replace financial experts, or will humans adapt alongside it? AI isn't coming. It's already here. It's quietly replacing experts, accelerating decisions, and reshaping how money works. Those who understand and act today will thrive. Those who ignore it risk falling behind.